This program is brought to you by Real Estimate. Know the value of your home today with a Real Estimate from realestate.com.au.
It's so good to be with you here on Business Now. Let's take you around the country, shall we, and check out the health of the housing markets. Look, across Australia, there were a healthy 1,743 auctions over the past weekend, with a clearance rate just above 62%. In Sydney, 733 auctions, and of those, just over 58% sold. Melbourne, a little quieter in terms of volumes, 587 auctions. Two-thirds of those, though, were successful. Brisbane had 86 auctions. It does remain a strong market. 71% of those sold. Adelaide, though, was stronger again. 81 auctions, almost 78% went successfully under the hammer. And Canberra had 66 auctions, 71% hold. But in some ways, those auction results do suggest there's been no immediate reaction to the Reserve Bank interest rate rise a fortnight ago. And in some ways, that could be a warning that more rate rises are needed to change consumer behaviour and to quell inflation. Eleanor Creagh is a senior economist with REA Group and joins me now. Eleanor, what's your own sense of that? I mean, we always know that interest rate rises or falls don't come as singles. There's two, three. The question now, this is strong.
Yeah, I mean, look, right around the country, it looks like clearance rates are still remaining pretty solid, despite that rate rise that we have seen from the Reserve Bank already, and the prospect of further interest rate rises coming down the track. Tell me your anecdote about what your real estate agent over the weekend told you. Interest rate rises don't matter for the housing market. What? Apparently really? So. I mean, I think what we're seeing at the moment is a little bit also reflective of the supply story. We know that new listings were down around 8% year on year in January 26 compared to last year. Total listings right around the country down around 15% year on year. So that's keeping stock moving because buyer demand is still pretty elevated. We've got inquiry volumes at a 4-year high on realestate.com.au. So in other words, supply and demand is that there's not enough supply and there's not enough homes, whether they be new or existing, coming onto the market, and you've still got demand coming out there from the potential buyers. Yeah, so demand is remaining pretty elevated at the moment. Again, we're seeing that right around the country. We've got inquiry volumes sitting at a 4-year high on realestate.com.au. That's somewhat surprising. If we take our minds back, that's kind of looking to the end of 2021, beginning of 2022, that tail end of the post-COVID housing market boom. So it's reflective of what is still strong home buying demand and also facing into what is a pretty limited pipeline of new listings at the moment. OK, so just remind me what influence the housing market has on the CPI and the inflation rate and therefore potentially on the future direction of interest rates. Certainly. So this is where I think it gets pretty interesting at the moment because when we look at inflation, housing is a very large contributor to inflation. Obviously, the RBA like to look at the trimmed mean inflation, which strips out those kind of one-off or more volatile price rises. So maybe some of the impact of electricity bills, which is also bundled into that housing cost in the CPI, might be stripped out of the trimmed mean. But rents is a really big component at the moment. And if you've got a tight housing market, you've got rents arguably rising faster than inflation. And that, of course, is adding to that inflation. That's exactly right. And it's not just advertised rents. It's actually rents paid across the housing stock or across the rental stock. So we're really seeing that kind of flow on of what has been very strong advertised rental price increases over the past few years. And what about home values themselves? So when we look at how home values play into the CPI, it also gets a little bit interesting. So it's not established home values, it's new dwellings and construction costs. But where established home values, I think, do play a little bit of a role in the CPI is the fact that we've got something called the household wealth effect. So when households typically see the value of what is most people's largest asset rising, it does play into some sort of a contributory wealth effect, whereby that can put upward pressure and incentivize spending, etc., on other goods and services. Yeah, so let's bring it all and wrap it in, because what it means now is even though there's been one interest rate rise, you're saying there's not much of a dampening effect on inflation to date, and therefore the prospect of more rate rises has to be there. Yeah, I think that's right. And I think we've also got a bit of a dichotomy or an irony whereby we've got rate rises potentially maybe limiting new construction and new supply via higher financing costs, and also, again, then feeding into that higher rental price story. I'll tell you what, Eleanor Creagh, always good to have in the program. Many thanks for your time today. Thanks for having me.